Hi everyone, I'm Ken from CryptoTradingKS and the inventor of the CTKS method and Borsog trading. If you're new, a very warm welcome, and welcome back KS family. From my 30 plus years in financial markets, I explain the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth and positive excellence in the process. Please note, I don't have WhatsApp or Telegram, and we've seen a lot of red in the market over the past trading session. We saw a broad-based rally in the US dollar, and even though we had reductions in certain components of the CPI, for example, energy came down, and used cars and used trucks, but unfortunately food and shelter went up, and that's about 1/3 of the CPI. Downward momentum on energy prices is being helped because US crude oil strategic petroleum reserves are being depleted. Economists and the Fed were expecting headline CPI to come in lower, and it came in hotter. Expectations were for a 0.1% decrease. We had a 0.1% increase. Core CPI, which excludes food and energy, basically the expectation was on a 0.3% rise. It was 0.6. It came in 100% higher. That created an absolute kick to the stock market and crypto. And we talked about this back on August the 29th, actually August the 27th. And on August the 29th, I was saying wait for the 100 basis point increase. And we can see now that there's a 33% probability that a 100 basis point increase will happen at the next Fed meeting of the FOMC. And that's in approximately 1 week. I did a very deep dive on Jerome Powell's Jackson Hole speech, where he outlined that he needed to attack rational inattention. That's what the Fed is trying to solve. If you have a look at episode 635, you'll see my deep dive there. It will really help you out. December 2022 rate hike expectations are expected to reach about 4.175%. This is very problematic to the economic system because it actually increases loan repayments and debt servicing charges, mortgage repayments, car loan payments, and puts the housing market at default risk, and also layoffs within the public and private sector. And we can see evidence of all of this already. A lot of people think that the Fed actually causes these problems. Actually, the Fed follows the market, and many thanks to Martin Vecina, who pointed out this data. You can see that the Fed is reactive, not proactive. This is pointing to a dramatic increase in the federal funds rate. One thing to keep in mind, total employment levels continue to rise. We've got a very strong job market. So even though some sectors in the economy will be laying off workers, there's a lot of sectors that will be employing workers as well. Economic changes occur very slowly. It's like watching grass grow. It doesn't happen tomorrow. And that's why, as crypto technical analysts, we obey Rule 252 because it's really important. Be prepared and not scared. There's so many advantages, so many opportunities when people aren't looking. And one of the things that prepares us for opportunities, and you must always be prepared for opportunities, is to first mark up your charts with the CTKS method. This actually reveals smart money buy and sell levels. And then we look beyond the charts, looking into the main markets and understanding economic policy and how it actually reverses back and hit markets. And we can see that the Fed potential interest rate, a potential 100 basis point increase in the federal funds rate is something that spooked the markets, but we knew about this weeks ago. You can't be caught off guard if you are prepared. Then we look inside the crypto market, finding the market's focus, understanding that each and every day you can actually make money in the crypto market. Sometimes it can be harder than other days. Sometimes it's easier, but it's always possible. To be aware and to be capable of seeing opportunities, we must master emotional control. When the whole world is going out of control, talking about depressions and recessions, that's where so much money is made. But it's not in going short. We can actually go long and do very, very well. In the past trading session, we saw the VIX, the fear gauge of the market, and Masterclass students, you get my live chart in TM6. We saw the VIX absolutely rally up. Now it's starting to overcome a level of resistance here, so we could expect more negative price momentum. Why do I say negative price momentum? Because when fear comes into the market, what we find is the prices sell down. When people get fearful, they exit the market. But professionals don't exit the market. That's when they get excited, if I can say such a word, because they're getting on the right side of the percentage. We saw bond prices continue to decrease in price. Gold did a bit of a rally, but then absolutely tanked. Why? Because the dollar just surged up, and it surged up like a crazy thing. Literally, when the dollar was surging up, Bitcoin and crypto was selling down very heavily. We've seen lags between the dollar taking off and Bitcoin reacting, and of course Bitcoin leads crypto. But this particular session, it was very, very different. It was basically instantaneous, and we can see yields are on a rampage. They're just going higher and higher. A lot of people thought that the dollar would just rally and rally and rally and not come down. It came down because of a lot of shorts just getting stopped out of their positions. When trades become overcrowded, you get a reversal of the position. So just be aware of that. That's kind of like when things are exceptionally bullish, negative price action occurs, and when things are exceptionally bearish, positive price action occurs. This is always good to keep in mind. And we can see that oil is starting to form an upward momentum, and junk bonds unfortunately came down, and that shows risk off inside the economic system. A lot of people think that you can't make money in recessions or depressions. This is absolutely and utterly false. Professionals love this negative price action because they get on the right side of the percentage. One thing to also remember, when we have very, very negative price action in the market, we have advanced and decline ratios that basically say more stocks, in our case cryptos, actually decline than advance. But there's always something advancing. Please keep your eyes on what is advancing. And in the last trading session, we saw the biggest one-day percentage drop since June 2020 during the throes of the COVID-19 pandemic. So it was a pretty harsh day. Even so, there were bargains and there were actually things that were advancing in price. Let's have a look at Bitcoin and see where it's heading. And of course, all of these lines are derived dynamic daily support and resistance, smart money buy and sell levels. They're called Stanfield levels. They're formed through the CTKS method, which is a method that I invented, which looks at all of price history, not just recent price history. And what do we see with Bitcoin? Bitcoin fell through its heavily defended 21,798 mark, and this happened exactly as the dollar was rallying. We've seen so much inversion between the dollar and Bitcoin. Just keep that on your radar. It's really, really good to see how the dollar moves around. Now, what did we actually see that happen? We came down through that very strong support level, now turned to resistance, down to another support level at 19,986. That is currently turning towards support. This has a lot of negative momentum behind it. It doesn't necessarily mean that it will do a V-shaped recovery. And why do I say that? Because what we actually are moving into is quadruple witching, which happens on the third Friday of each quarter. We've got so many options expiring. In fact, on this day, there's $481 million worth of Bitcoin options expiring. Before we have a look at the dollar, it's a very good idea to keep in mind the 10-year break-even inflation rate and the 5-year break-even inflation rate. This is what Jerome Powell talks about by rational inattention. These rates must come down, and they need to do everything they can to do that. But of course, the Fed can only control one side of the equation, the demand side. It can't control the supply side that's actually created the inflation in the first place. Just pay close attention to what the 10-year and the 5-year are actually doing. We saw a bit of a kick up, irrespective of the markets absolutely tanking. Within a week, we're going to see what the probability is of a 100 basis point increase. I mentioned that this was a statistical probability coming up to the actual FOMC meeting, and here we see it for the first time. Looking at the dollar, we saw an incredible rally, absolutely incredible. And where did it stop? At that smart money sell level at 110.012. And these dynamic lines are formed each day because and due to overall market structure. When you see a person just saying, oh, the resistance level is here and it's here because that's recent price action, that's almost like saying this thing just existed in this period of time. It doesn't work that way. Inside the stock market, inside crypto, inside foreign exchange, all of these charts need to be assessed by their total price action. That's what the CTKS method does. So it's actually not surprising for us to see price come up, or the DXY come up here and be rejected, because that is a structural resistance level inside the DXY. It's not formed from recent price action, it's formed from all of price action. And one thing that you can see, as the dollar absolutely rallied up, what did Bitcoin do? It absolutely plummeted. Now the DXY is experiencing overhead resistance. What's happening to Bitcoin? Now, if you're in the stock market and you don't look at crypto, you can think about Bitcoin and crypto as being the canary in the coal mine, if you like. It throws out such a fast signal. The problem with inflation is that it is actually structural. There's a lot of problems and a lot of supply chain issues, and we've done very, very deep dive analysis on Fed speeches. I would urge you to look at past episodes. You'll get such a fantastic understanding because you'll get the speech actually analyzed from a neutral perspective. Just as the DXY was a very overcrowded trade, so too was the bearish sentiment within crypto and the main markets. That's why we saw so much covering behavior, just forcing a buying spree. Price is always moving in a wave, and so are investor emotions. So we saw so many shorts exiting the market. It was just getting overstretched. Now they've started to come back in, and we can see the longs have actually been buying the dip. Let's check out liquidations. In the past 24 hours, there's been 358.51 million in total liquidations across 98,387 positions. In the last 24 hours, around 74% of total liquidations were long liquidations. In the past 12 hours, around 81% long. In the past 4 hours, we can say about 73% long. And in the past hour, it's flipped across to 87% short. One thing that's really, really interesting, when we see massive liquidations inside the crypto market, that generally can be a bit of a turnaround. But we've not seen any literal multi-billion dollar liquidations. These liquidations are actually quite small. And because they're so small, this could mean there's more pressure to come. So just be aware of that. We know because of Rule 45, no alt can escape Bitcoin's gravity. So we would expect the alts to have been very hard hit. We can see global crypto market cap decreased by 6.4% over the last trading session, and we've seen it decrease to $991.06 billion. Looking towards the greatest gainers in the past 24 hours, Lunacy up around 15%, Luna up 8.6%, USTC up 7.64%, KNC 5.7% up, TWT 1.4% up, and Celsius just a little over 1% up. The greatest losers over the past 24 hours, helium down 13.44%, the graph 12.9% down, near protocol 10.87% down, EOS 10.5% down, XMR 10.27% down, and Flow around 10% down. Looking at the top alts, we can see Ethereum just in alignment with Bitcoin's gravity, selling down, but just a little bit more strength. BNB mainly moving in alignment with Bitcoin's gravity. We can see poor old ADA was selling off before the sell-off in Bitcoin and continues to sell off. It's showing a lot of weakness just currently. And we know from crypto's behavior that the strong become weak and the weak become strong. That's just the way it works. XRP just moving in alignment with Bitcoin's gravity. Solana moving in alignment just a little bit weaker. Doge moving in alignment but weaker, almost an ADA play, very, very similar. And we look at DOT, that was weaker, retained, and then sold off. DOT is quite weak. Matic has been acting just in alignment, very nice alignment actually. The way to trade in markets like this is through Borsog. Borsog is a trading and investing market synchronization technique, starting with really small position sizes and then scaling. What you want to do is you want to synchronize in with the market and then scale. If you find yourself desynchronizing from the market, just descale. It's important to remember that you control the trade, but the market controls the return. The market doesn't know you and never will. It only knows your knowledge levels and your emotional control levels. So always think with the traffic light. If price goes against you, what will you do? If price goes just flat or neutral, what will you do? And if price goes for you, what will you do? And that actually relates to your entire portfolio and any specific trade or investment. What we do each and every day is we put our Borsog code down, and the Borsog code is all about, do we expect the market to go down? That's a D there. To go flat, that's an F there. Or to go up, that's a U there. And what do we think is the percentage probability the price will move against us, go flat or go neutral or go for us? And then how synchronized do we feel with the market? And congratulations to everybody putting in your Borsog codes. Each day you do this, you actually tell the market, hey market, I'm taking my active learning really seriously. Reward me for that. And the market will. And a critical thing, do not let the market control your emotions. If the market controls your emotions, just know that the market doesn't know you. It's all about just getting as much knowledge and as much insight as you can. Everybody gets caught on the wrong side of the trade from time to time. That's not a problem at all. The key is getting to the right side of the percentage. And on days like today, there are possibilities and potentials around. So always think with an opportunity mindset. When people look at all the red on days like today, they can get very discouraged. They look at the markets and say everything is down, but that's simply not true. There's a key shift in attitude which could be really, really helpful to you. If you see the difficulty in every opportunity, the market will relentlessly take your money and give it to those who see the opportunity in every difficulty. It's really important to have an opportunity mindset. The key is, how do you look for opportunities? This is what we do each and every day at the end of the episode. We look through the crypto sectors, trying to understand how they move with one another, how they align or disalign. It takes a bit of time to see the patterns, but they are definitely there. And please let me know in the comments, how do you create an opportunity mindset? How do you combat the fear that is so obviously palpable on days like today? It can be an extremely difficult thing to do, but all professionals look for opportunities. And what we're all about inside our community, inside our global family, is adopting the smart money mindset, not the retail mindset. Retail mindset gets people financially slaughtered. But the smart money mindset is something completely different. It's a veteran's mindset. And the veteran's mindset is in fact a mindset. It's a way that you think. That's why we always talk about mastering yourself to master the market. Learning is the key to the professional mindset, to the smart money mindset. That's why we always say, I am dedicated and committed. I win or learn and never blame. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care and see you next time. Bye for now.